that are in Germany from your group?
Also,
they are not here today. But you in your group, so students are currently in Germany.
Two of them in German.
Okay, and where are they in city in Germany? Do you know that?
I don't know.
You don't know. Okay, all right. Okay. So it's three of us. So I don't know whether there will come other students. Ray, normally are there more students in your group, or is it always like that?
But I don't know why they are not here. I told them it's time to class.
Okay, but normally there are more.
No.
Or not? Is it normal like that? What is the average? How many students are there normally? Is it more like, is it 3 or is it 5 or is it 7?
Normally it's 5.
Normally it's 5. Okay, so we will see. Maybe next time I will upload the slides after the lecture or during the lecture at Elias. Do you have access to Elias? Do you know what Elias is? The platform, the learning platform. Have you heard of it? Do you know Elias, Ray?
Yeah, I'm here.
Do you know Elias, the learning platform, where you can download things and stuff, material?
In the email, it's in the email.
You see in the email, yeah. Okay, so but you don't know what Elias is. Elias, I write it in the chat. Have you heard of this a platform, and do you have access? Yeah, Elias.
I can't. I haven't.
You haven't. Okay. I will. Okay. I will talk about the administrative stuff, whether you can get access. Now we have another student. This is Zoe Chen.
Yeah. She's in China too.
She's in China too. Is it so? Zoe Chen, can you hear me? Okay, super. Then we can start. And this is we regularly start at 9 o'clock in this German time, a.m. In China now it's afternoon. Is this correct?
Yes, afternoon, 3 o'clock.
3 o'clock. Okay. So this is our normal time when we have lecture, and so I don't know currently when do we have the next lecture, but I think it will be in 2 weeks or so. I have a timetable. Do you also have a timetable with the lecture array where you can see when our lecture is?
we don't have timetable.
You don't have a timetable?
Yeah.
Okay. Okay, I will ask for then. But anyway, I mean, I can write you an email the next time when there is a lecture, though. Then you have access to this online classroom. But nevertheless, it is actually better if you have a timetable. Do you have a timetable for the other lectures, Ray?
Maybe yes.
Yes. Okay. But it's only this lecture. This is which is not included in the timetable.
Yeah.
Okay. Okay. So I will ask whether we can whether we can include this this lecture in the timetable. So then that you have an overview over when we have a lecture. But it will be normally it will be the same time. So this is 9 o'clock German time, and as you said, it's probably 3 o'clock in the afternoon in China.
Okay.
Yeah. So then we have another student. This is Sue. Hello. Sue, can you hear me? Hello.
Yes.
Nice to meet you. How are you?
Great, thank you.
Are you in China? Sue is your name? Is it correct?
Yes, but I'm in Germany.
You're in Germany. Okay. This is great. Where are you located? In which city in Germany?
Wiesbaden, Hessen.
Wiesbaden. Okay. All right. So, and I'm in Düsseldorf.
Ah.
I'm in Düsseldorf, and you're in.
I have been to Düsseldorf for 1 month before.
Ah, okay. So, and Wiesbaden, what's the weather like in Wiesbaden today? Is it good, or is it rainy or cloudy?
Things not so good, a little cloudy.
Okay, yeah. So you are, but Sue, you're also from China. This is correct.
Yes.
But you are now in Germany. For how long are you in Germany?
For about 8 months.
Okay, cool. Yeah. When did you arrive?
Last year.
Last year. Okay.
Last semester.
Last semester. Okay. And so your group in Germany, you are probably a couple of Chinese students in Wiesbaden. Is this correct?
Yes, we have also Herr Lee start here.
How many Chinese students are there with your group in Wiesbaden?
As far as I know, only me and another Herr Lee and other 3.
Okay. Yeah, I think he wrote me an email. Do you, because I just talked to Ray, and that there it is not in the lecture is not, she cannot see it in the timetable. Can you see the lecture in your timetable?
Also not.
Also not. Okay. So I will talk to the administrative stuff. Then whether it will be probable, whether it would be possible that you see the lecture in the timetable. Do you see the other lectures in the timetable? Yes, probably. From the other.
I was informed by the email you sent to us.
Yeah. Okay. but that is okay, and I can also write you an email when the next lecture will take place. But anyway, I mean, it is better when you know when you also see it in the timetable, and you can plan. Yeah, but it will always be. I think it will always be about the same time at 9 o'clock. Okay, so
sure, thank you.
Yeah. So we can then we can start with the lecture, and I would be happy if you participate. So just if I ask questions, then you are very welcome to answer, and it would be really great. Yeah. So we. I think you also learn the most when you actually actively participate in the lecture, when it's more like a discussion than a monologue. So I would be very happy if you participate and ask questions and answer my questions. So then I think the lecture is worth more to any one of us. So what we are doing today and in the next lecture is a course called Finance Management. And actually, do you see the slides?
Yes, we can see.
Yes. Okay. All right. So so what was it before I start? Was it easily possible to enter the online classroom there, or were there any problems with this program GoToMeeting? Was it okay?
Okay.
Yeah. Okay. And you also you can also hear me quite well. What is?
So far, so good.
So far, so good. So what is the when you're doing your lectures with the other lecturers, with the other professors, what program do they use? Do they also use GoToMeeting, or do they use Zoom, or do they use I don't know, Teams or Skype?
We use Zoom and GoToMeeting.
Oh, okay. So actually, I divided the course into two parts, and I think the bigger part we will see, but I think the bigger part of this course will be about financial accounting, which is basically it's about the financial statements of a company. Yeah, there are financial statements, for example, the income statement, the balance sheet, the cash flow statement, yeah, and how a company presents itself to the outside world. This is financial accounting, and then we will probably also do a second part of this lecture, and this will be more about corporate finance and investment analysis. Here, the second part of the lecture is about how to analyze a company. Yeah, how to value a company, how to analyze a company, how to analyze corporate policy, what they do, whether they pay out dividends, whether they repurchase shares, whether they issue debt. Yeah. So and it's more about we will do it with cases. So, but first of all, it is about the first part, and the first part is based on a book, which is, let me see whether I can I can draw here. Yeah. That seems to be. This is the book where this part is based on. And the author of the book is called Harrison, and the book is called Financial Accounting. So I will do exercises with you, and the exercises, they are taken out from this book. So and if you want to have some background information, then I advise you to look at the book. Yeah, you can get it probably in the library, or you can also, of course, buy it. So this is the book where this lecture is based on. So this is the content of the first part. I'm still struggling with just the drawing mode, so now I have erased it. So this is what I wanted. So this is the content of this this class, and today we are talking about the basics of financial accounting. The basics of financial accounting. This is mostly, it's about the framework of IFRS. Yeah, we are talking about IFRS here. IFRS is the International Financial Reporting Standards. Yeah. Has anybody of you heard of IFRS? Or maybe did you also have a did you also have a did you also have already have a finance course or something like that?
Yes.
Okay.
Last term I have financial accounting. It's my worst subject.
What is it? I didn't get it, Ray.
I have the financial accountant in Chinese. I have
Okay.
this in Chinese in China, but it is the worst subject. It is my
Okay.
worst subject.
Okay. So you didn't like it.
I don't like it.
Okay. So we will see. Maybe hopefully it will improve. we will see. So the second item is about recording transactions. Yeah, transactions is everything that happens in a business. Then we're talking about accrual accounting. Accrual accounting means that actually means that accounting is not based on cash, yeah, but rather on income and expenses. Yeah, so it's not so much about cash. There's also cash accounting, but in IFRS we do not have cash accounting. We have accrual accounting. That means it's based on income and expenses. Yeah, and then we basically we go through the balance sheet items. Yeah, we're talking about accounts and notes receivable. Accounts and notes receivable is when a business has sold something to a customer, yeah, but has not collected the money yet. Yeah, then the business has an account receivable. Yeah. Next item is internal control. Yeah. How the business controls, how the business audits things. Item 6 is about property, plant, and equipment. Property, plant, and equipment is basically that's that's long-term fixed assets. Yeah. So this is real assets that you can. These are assets that are tangible, yeah, and long-term. Point 7 is intangible assets. Intangible assets is assets which you cannot see. Yeah. Does anybody can you tell me an example of an intangible asset? Yeah. Very good. Thank you very much, Liang. This is, for example, patents or copyrights. Yeah, goodwill would also be an example. Then the next point is investments. And investments, when we're talking about investments here, this financial assets. So, for example, stocks. Yeah. Do you know what a stock is? Can you maybe explain what a stock is?
Shareholder.
Exactly. Yeah. So very good. When you own a stock, you are a shareholder. Yeah, and that means essentially you are the owner of a business. Yeah, you own the business. Yeah. Other investments are bonds, for example. Yeah, bonds. When you are a bond holder, when you own a bond, then you are a creditor of the company. Yeah, you're not the owner, but the creditor, and you get interest. Yeah, the company has to pay you interest, and that's a bond. The next section is about we are having a section on accounting for international operations. Yeah, because business is special when we are talking about international operations. International operations, as you know, international companies or international countries, they have different currencies and different regulations. So this is a little bit special, and that's why we are having a special section on this. And the 10th point is about consolidation. Yeah, and consolidation, when we're talking about accounting, consolidation basically means combining financial statements. Yeah, so when you have a company and it is a group, yeah, group means a parent company and subsidiaries. Yeah, parent is the company at the top, and then you have subsidiaries, which are basically the baby companies. Then you have to combine those companies, those statements of the companies, to get a decent picture of the entire group. Yeah, and this is called consolidation. Yeah. Chapter 11 is about liabilities. Liabilities is, for example, debt. Yeah, when a company issues debt, that's a liability. Yeah, but it's also, for example, accounts payable. Yeah, when a company buys inventory. Yeah, let's say here in Germany we have, for example, BMW. You know, the car company BMW, and let's say they are buying tires for manufacturing cars, and they buy the tires, but they do not pay immediately for the tires. Then they have an account payable outstanding. Yeah, and until they pay, for their account payable, it is a liability. Yeah, they have an obligation to pay for the tire. Yeah, so this is accounts payable, and we have share owners equity, and share owners equity is basically, this is assets minus liability. Yeah, sometimes you also call it net assets because you have to deduct the liabilities from the assets to come to share owners equity. And yeah, this is the net worth of a company. And then the last point here is the statement of cash flows. We will also have a lecture on the or a session on the statement of cash flows. And here we are really actually talking about the cash flows. Cash flows can be cash inflows or cash outflows. And here in the statement of cash flows, accounting deviates from accrual accounting, but this is an exception. Normally we have accrual accounting. Yeah, here in this statement, we are really talking about the cash flows. So what are the learning objectives? You're going to learn about how to read financial statements, how understand what a company is doing. Yeah, what is the business model of a company? How is it earning money? How is it making money? Do you know which financial statement you should look at when you want to know how a business is making money, or how much money the business is making? Yeah, Ray, you said cash flow. Cash flow shows how much cash is coming in, how much money the business is making. Cash flow is not wrong. It's actually, you could also look at the cash flow statement, but you could also look at the income statement. And the income statement is more about, it's not about the cash, but it's about the earnings. Yeah, the earnings. Exactly, Liang. It's about the earnings, about the net income. Income statement. And then, what is the financial position of a firm? What is the financial statement of position of a firm? Do you also know which statement to look at when you want to know what the financial position of a firm is? Financial position. There are the assets and the liabilities. Which statement have you heard of the name of the statement? Where are the assets and the liabilities and equity? Any idea? That's the balance sheet. Yeah, that's the balance sheet. Yeah. The balance sheet. By the way, Ray wrote profit and loss statement. for how the business is making money. And this is also correct. Yeah, the profit and loss statement and the income statement are the same. Yeah, this is just another name, but it means basically the same. So profit and loss statement is also correct name for the income statement. So chapter 1, basics of financial accounting, and this is basically it's about the framework. Yeah, the framework of IFRS. And what does that mean, framework? Basically, IFRS consists of several standards. Yeah, so for every position or every other position, there is a standard. For example, if you want to know about inventory, if you want to know about accounts receivable, then you have to look at the standard. Yeah, and the framework, which is what we do here, the framework helps to develop those standards. Yeah, it sets the rules for the standards. Yeah, and it essentially it helps to understand the basics of financial accounting. Yeah, so for example, what in the framework there is a definition of assets, and there is a definition of liabilities. So what are the elements you were dealing with? Yeah, this is the framework. This slide is about the difference between financial accounting and managerial accounting. Yeah, and the main difference is actually that financial accounting is based at external decision makers. Yeah, so this is based at external decision makers, and managerial accounting is based at internal decision makers. So internal decision makers means within the company. External decision makers means to the outside of the company. So what are external decision makers? The most important group actually is investors. Investors. What is an investor, and what do you think? What do we mean by an investor? Any idea? How would you define an investor? What is an investor? Okay, Liang, yeah. The investor, he or she puts some money into the company. This is good. This is correct. Yeah. And it is a shareholder. Yeah, shareholder. It's a shareholder, and that means the owner of a business. Yeah. So when you are a share owner of a company, then you own the place. You own the company. You are the one that owns the company. Creditors do not own the companies. Yeah, they own the debt of the company. They own bonds, for example. Yeah, so this is, for example, this is bondholders. Do you have any idea what a bond is? Have you heard of the name of a bond? And if you have heard of the bond, can you tell me what it means? Any idea? So a bond is a debt instrument. That means actually the bondholder is lending money to the company, and the company has to pay it back. Yeah, after a certain amount of time, the company has to pay it back, the principal and some interest. Yeah, otherwise the bondholder wouldn't give the money, wouldn't lend the company money if the company wouldn't pay interest to the bondholder and wouldn't pay back the principal. Then we have regulators. Regulators are there to set certain rules. Yeah, for example, in Germany we have what is called the BaFin. Yeah, we have the BaFin, and the BaFin is there to basically to supervise banks. Yeah, that the banks are staying within the rules. And in the United States, for example, we have what is called the SEC. This is the Security and Exchange Commission, which is there for publicly traded companies. Yeah, they are there to control them. Yeah. Okay, then let's go on. We have suppliers. Any idea what is a supplier? Exactly, yeah. They supply the goods, Liang. Ray says, give the good or service to people, yeah, to the company. This is correct, yeah. This is good. So it sells, the supplier, he or she sells things to the company. Basically, it's the inventory, yeah, like raw material, for example, yeah, or also merchandise. Yeah, if in the case of a retailer, it's merchandise that is sold to the company, and the party which is selling the merchandise is called a supplier. Then we have the public, yeah, the public, and we have customers. Everyone probably knows what a customer is. Of course, that's the party to whom we are selling. Yeah. So these are all external decision makers. They are outside of the company. We have managerial accounting, and managerial accounting is a little bit different because this is more about internal control and internal management. Yeah, this is for managers, for directors, how to basically steer the company in which direction. So this is managerial accounting. And then we have tax authorities. This is tax authorities is in the lower left here of the slide. Is a little bit separated apart from the other things, because it's because it's basically the rules are a little bit different. They have the tax authorities, they have their own rules. Yeah, that's why it's separate, and so they require additional reporting standards. Yeah, we have talked about the suppliers. Ray gave an example. The farmer gives the raw chicken to McDonald's. This is correct. Yeah, the farmer is the supplier of McDonald's. Yeah, this is a good example. So the financial accounting is about annual reports. Yeah, and here we have a typical structure, how a typical annual report looks like. And basically, often it starts with some corporate information. Yeah, it might be the short history of the firm, key people. Yeah, the key people might be, for example, the founder, the CEO, yeah, the chairman, different markets the company has, different countries, different segments. Yeah, and then we have a second part, and this is there is included. There is a letter to from the chairman and a letter from the CEO. And by the way, do you know what is the difference between a chairman or a chairwoman and the CEO? What is the difference? What is a chairman for, and what is the CEO for? Okay. Then I will explain it. The CEO is the boss of the company. Yeah, and the CEO. Yeah, the CEO is the manager. Yeah, the chief executive officer. This is correct. Manages the money. That manages the company. Yeah, so that's got it. This is the manager. Yeah, the manager is good. This is correct. And the chairman is basically, this is the chairman of the board. Yeah, the chairman of the board. And the board is there to supervise the management. The chairman is there to supervise the board. The chairman. Sorry, the chairman is the chairman of the board, and the board is there to supervise the management. Yeah, and the CEO is basically, it's the boss of the management. Yeah, it's the highest highest manager. Yeah, and then we have a part which is often called management discussion and analysis. This is where the management discusses how the business is doing. Yeah. And then we have other statement of disclosures, for example, about corporate governance. Corporate governance is about the relation between the share owners and the management, and whether the company acts in the interest of owners, things like that. We have a section on internal control. And then we have the financial statements. We have the financial statements. Financial statements are income statement, income statement, balance sheet, and cash flow statement, and so on. Yeah. So there are a couple of questions. Chen asks whether the chairman is one of the share owners. The chairman can be a share owner, but not necessarily. Yeah, share owners. There are many share owners. For example, you can also be a share owner of basically of any company. You can be a share owner of Apple if you buy the Apple shares, or whatever company you like. Yeah, you can buy a share today, but you are not. You will not be the chairman today. Yeah, this is something different. But the chairman can also be a shareholder. Yeah, it's not forbidden for the chairman to be a share owner. Yeah. Okay. Let's move on. In an annual report, management acknowledges that their members are responsible for the financial statements. Yeah, so this is important, that the management is responsible for the financial statements. It's not the auditor. The auditor gives an opinion about this financial statements. Yeah, but responsible is the management. And then we have the external auditors. Yeah, and they give an opinion. Does anybody know a name of an auditor? Have you heard of an auditing of an accounting firm? The name? This was Chinese signs. I cannot read them. So, for example, I don't know. For example, Deloitte. Okay, maybe it's a Chinese firm, but you don't know what it means in English. Yeah. So, for example, Deloitte or Ernst & Young. In the English speaking world, we have the Big Four: Deloitte, Ernst & Young, KPMG, and what is the other one? PricewaterhouseCoopers. So anyway, the auditor is the firm who gives an opinion about the statements of a firm, and there are different opinions. So we have an unqualified opinion. Unqualified. Unqualified opinion. This is the best. Yeah, this means without qualification or without reservation. So here the external auditor approves the statement and says, okay, this is without reservation. We give the company an unqualified, opinion about the company. This is very good. Yeah. Then we have a qualified opinion. Qualified opinion, and that means there's a disagreement on one section. Yeah, let's say on, I don't know, on inventories. Yeah, we have a disagreement on inventories, and that's why we only give a qualified opinion. Yeah, we have a reservation about something. Yeah, and then the last opinion is called an adverse opinion. An adverse opinion, and this is the worst. Yeah, if you have a company and it's really, there is some big major issue about the financial statements, then the auditor says, okay, we give the company an adverse opinion. That's the opposite of an unqualified opinion. Yeah, and that means basically the statements do not fairly represent the company's financial position. Yeah, and it's important, the financial statements, the balance sheet, the income statement, and so on, of all listed firms have to be audited. What does listed mean? What do we mean by listed? We are talking about a listed firm. That means listed on the stock exchange. Now, this is listed on stock exchange. Liang asks IPO. IPO is called initial public offering, and any firms that is listed on a stock exchange has had an IPO in the past. Yeah. When you first have an IPO, then the shares are sold to the public, and when they have been sold to the public, then the company is listed. Yeah, and the shares are traded between the shareholders. Yeah. Then after the IPO, at the IPO, the transaction is between the company and the shareholders. Yeah, the company sells the shares to the shareholders, and after the IPO, the shares are traded between shareholders. Now the company then is not any longer involved in buying and selling normally. Yeah, but when at that time, the company is called a listed company. Listed means it's traded on a stock exchange. On the stock exchange. Stock exchange. Okay. I would say so far is it okay? Is it how we do this? Is it okay, or is it too easy? Is it too difficult?
It's adequate.
It's adequate. Okay, so good. Okay, that's fine. Then thank you very much. Then I would say let's have a break here, and let's continue in about 10 minutes. Yeah, is okay. So 10 minutes break.